one of the main principles about borrowing money is how you're going to pay it back with your income. Duh. What's going on, guys? My name is Minh with What's a Mortgage. Welcome to our channel. The goal of our channel is to educate, empower, and to connect you with the right mortgage. And tonight, we are going over everything you need to know about your income and how to qualify for home ownership. This is part one of our series. It's a two-part series. Tonight, I'm going to break down the different types of income you're going to need and break down that income on what you need to do to qualify for home ownership. If it's your first time tuning in, do me a huge favor. Hit the subscribe or notification button so you can join the What's a Mortgage family, right? The WHAM fam. And you'll get notified every time we post new video or go live. We go live Mondays and Wednesdays on Facebook and YouTube, and we post our videos Sundays and Wednesdays at 9 a.m. So don't forget to check it out. Also, guys, on Instagram, every day we give you a little tip. Every day we give you that one brick to get closer as you're building your house to get into home ownership. All right, guys? Also, ask a lot of questions. This is an interactive channel. So you have questions regarding home ownership. If you're buying tomorrow, next week, a year later, 3 years later, 5 years later, if you have questions holding you back from buying, please ask. All right, guys? Also, guys, if you find this video helpful, useful, do me a favor. Hit the like button and please share it with somebody. It helps the algorithm a lot. So let's get into it, right? Everything you need to know regarding income when you're trying to qualify for home ownership, right? How are you going to pay back the money? I want you to ask yourself this. If you are borrowing hundreds of thousands of dollars, right? You got to pay back somehow. You got to give the institution you're borrowing money from some type of certainty you can pay it back. And you're going to do that with your income. So how do banks view your income, right? They're going to loan you money based on 4 types of income. So if you're borrowing money, you're either on fixed income, rental income, self-employed income, or wage earner income, aka W-2, right? So if you're borrowing money and you're getting income, you're falling under one of the 4 categories, or the bank's not going to loan you the money, right? Well, and you're probably thinking, well, my income doesn't fall into the 4. It will once we break down the 4, okay? Let's get into the first type of income, fixed income, right? So when you're talking about fixed income, there's 2 types of fixed income. There's government ordered or court ordered. When I say it's government orders, typically it's going to be your Social Security income, right? If the state of whatever state you're in provides you income, or the government provides you income, that is government income. So if you're getting government income, right, that is a fixed income, right? The second type of income is court ordered. Court order can be a lot of things. It can be child support, alimony. If you were in a car accident and you're receiving income, right, that is court ordered. If you have workers' compensation, right, that is court ordered. If the court orders anyone who pay you money, that is court ordered income. But if tomorrow cousin Jimmy promises to give you $1,000 a month because they owe you money for 2 to 3 years, you cannot use that as income because it's not court ordered, right? At any time, Jimmy can pull back. So when you are using income, and I see it happen all the time, government is pretty vanilla, right? Pretty easy to understand. Court ordered, that's where it gets very sticky, right? So remember, if you're receiving income, who commanded or ordered the other party to give you the income? Was it a promissory letter, right? Oh, they promised me that, and it's been stamped and it's been notarized. It has to be court ordered. They can't all of a sudden make up something to pay you, right? So remember that. So court order is very touchy. When you're doing court ordered or government income, right, they're going to ask for a reward letter, right? So if it's Social Security, you get a reward letter every year. It will increase because of inflation, right? Court ordered letters, right? Whatever money you're supposed to get, there has to be a letter that you're receiving the money, right? And last but not least, if it's court ordered, they want to see the last 2 months of your bank statements to prove you're receiving the money. All right. So once you have the letters and you have the statements to prove you're getting the money, then they can count that as income when you're trying to qualify for home ownership, right? It's not that bad. Only 2 month bank statements to show that you're getting the money. Well, what happens? You're getting cash, right? If you're getting cash or you can't prove that you're receiving the money and you have the court order letter, guess what? You can't use that income to qualify. Okay? It has to be court ordered, and you have to show proof of consistency that you're receiving the money to qualify for home ownership, right? So definitely, I think if you're buying a home and you're doing something with fixed income, I think one of the biggest problems people run into is they don't go out and get the documents, right? They fall in love with the home, and now they're rushing through escrow, and now they have to go to Social Security, get in line, or go to the courthouse, get some documents, right? A lot of people can't find old child support letters or alimony paperwork, right? They have to go back to the court. It can eat up a lot of time, especially when you found a house and you're in love with it, and the lender needs to provide a pre-approval or an underwritten approval, and people run into issues where they can't get the information. So if you are using fixed income to qualify for home ownership, right, definitely make sure you have all your ducks in a row and have all your paperwork ready so when the lender approves you, you can move forward quicker. I see it happens all the time, right? That people go out there, they fall in love with their house, and they're on fixed income. I think I have one right now, right? They're on Social Security income, but they don't have their updated reward letter, right? They had one from 2 years ago, right? So definitely, guys, make sure you have those things if you're using fixed income. The second type of income, Jonathan, this is for you, rental income, okay? Also, rental income, there's two types of rental income. There's existing rental income and there's future rental income, okay? With existing rental income, they're going to go off your tax returns, right? You have something called a Schedule E. They're going to look at your tax returns to see what you gross, what you wrote off, what the mortgage interest is, what your property taxes are, okay? So when it's existing rental income, is pretty easy, okay? It's going to be on your tax returns. The second type of income, future rental income. So there's a couple different types of future rental income. So if you own a house and you're vacating that house to buy another house that you're going to move in, right? That vacating home is called future rental income. If you're buying a property to rent it out, you have future rental income because you have no proof, right, that you have consistency in receiving that rent yet, okay? So with that, the lender's going to want a rental contract, and they're going to want the deposit, right? So I see people do it all the time. They don't have a renter yet, and they go out and they try to squiggle in that rental contract, right? Which I think you should not do, right? Make sure if you say you're going to charge the tenant a deposit of 2-3 grand, make sure you receive that as a check. I see people where they say that the deposit was 3 grand, but then the tenant only gives $1,000. Now they can't qualify to buy the house as a rental property. Okay, so make sure you have all your information right. Also, guys, remember with rental income, it's up to 75% of the gross income, right? Of course, if it's existing, you're going to go off the tax returns. If it's future, it's 75% of the gross income, up to 75%, which means also, if you've been a landlord already, right, and you've been a landlord for a season of time, right, you can use the full 75%. If you haven't, right, you can go up to 75%. We're gonna go into details on that, on everything you need to know regarding income to qualify for home ownership, part 2. That was a mouthful. But there's gonna be a part 2 that's gonna break down fixed income more. It's gonna break down rental more, right? But today I just want to give you a little, lay down the foundations for you to understand when you're trying to qualify what type of income you might have, and also what documents you might need. Okay, so with existing, you're gonna go off your Schedule E. If it's future, they're gonna want that. They're gonna want that rental lease, right? Rental contract, and they're gonna want the proof of your deposit check. Okay, if you want to use rental property, right? If you don't have it, you cannot use future rental income, because if you don't have a tenant who's gonna occupy the property and take it over, right, you can't use future rental income to qualify, which means you have to qualify with your new home and your old home, both mortgage payments, if you're upgrading. If you are buying a rental property and you don't have that deposit, now you have to qualify with that payment, but without help with rental income, which can increase your DTI, which a lot of times can knock you out of qualifying for home ownership. So make sure when you're doing rental, right? I don't see too many problems with existing because they see it on the tax returns. The only problem I see with existing, sometimes people write off too much, right? Because they wrote off a lot, even though technically they are positive, but they're negative because they wrote off too much and now they have negative income. For example, if you look on your Schedule E after your accounts receivable minus all your costs, if you're negative 12,000, right, that means you're negative $1,000 a month. If you're negative 6,000, you're negative $500 a month. It's almost having a $500 a month credit card. Okay, so be very careful with existing rental, not to write off so much if you have rental, but you're trying to buy another property. Okay, with future, the biggest issue I see people run into is they need to have a tenant. So if you're buying a property, make sure you have a tenant. Why? How can I get a tenant if I don't own the property yet? They want to assume that you are going to do it. But let's say you buy a rental property, right? And the property already has a tenant in there. You're going to need the existing rental contract, right? And as long as you have an existing rental contract and they can show proof that the tenant is currently making payments, then you'll be fine. But if you buy a property and you have to put a tenant in it, make sure you have the right information, then you can qualify, okay? The third type of income, self-employed income, okay? So when you're self-employed, typically you're a sole proprietary. I think people get confused sometimes about self-employed. If you are an independent contractor, you're a self-employed, okay? If you have employees, of course you're self-employed. But a lot of times people, they talk to me, hey, Minh, I have a job, I work for a company, but that company 1099s them. If you get a 1099, you are self-employed, okay? So you're gonna file either a sole proprietary, a C Corp, an S Corp, or an LLC, okay? Typically, you'll get 2 years of your Schedule C, 1120s, or 1120S, and your K1s, right? It all depends on what you file. So remember, you're gonna need a 2-year history. With self-employed, right, you can go, if you go from W-2 to self-employed, which a lot of people are because of this pandemic, they're gonna want a 2-year history that you've been self-employed, right? But if you go from self-employed to wage earner, you don't have to wait 2 years. So remember, when you're going self-employed, make sure you let the lender know, hey, I'm self-employed, right? And if you just converted, let them know how long. But if you've been self-employed for over 2 years, make sure you have all your documents, all right? We're gonna go over in part 2 on what the lenders are looking for. Today, I just wanna go over, if you're self-employed, you can still buy a home. They're gonna go off of your tax returns. That means you gotta be a good boy or good girl for 2 years, and you might not be able to write off everything. What I would do before you submit your tax returns in 2021 for 2020, let a lender review it if you're trying to buy a home or refinance in 2021. The last thing you want to do is you wrote off everything and you're not showing any income. You might have all the money in the bank. You might have the good credit. But if you wrote off everything, unless you plan on paying cash for the home, you're not going to get it, right? So make sure you have your documents ready for the lender so they can take a look at it and so they can average out your income. It's either inclining or declining. If it's declining more than 20%, they're not going to average it. They're going to take your recent year, which is probably going to be your worst year, and divide that by 12, okay? It all depends. If you decrease more than 20%, all right? So now we went over fixed income. We went over rental income. We went over self-employed income, right? Last but not least, our most popular one, wage earner, W-2, okay? So if you're a wage earner or W-2, right, it's the easiest way to qualify for home ownership. They're going to ask for your last 2 years of your W-2s, your 30 days of pay stubs. Remember that I said 30 days. And they're going to order a VOE. All right, right now, as everyone is either changing jobs or changing careers, if you want to qualify to buy in 2021, you just need to be at that job for 30 days. They're going to ask for 1 month worth of pay stubs, right? As long as your income is 40 hours a week, they're not going to average. But if you're part-time and you don't have that full 40, right, and you quit a job or you got laid off and you went to a new job, they're going to take the average, okay? So make sure when you're a wage earner, right, it's a lot more self-explanatory than the self-employed, rental, or fixed, right? They're going to go off of your pay stubs and your W-2. If you've been at that job for only 8 months, right, they're going to do 40 hours for 8 months. If you've been at that job for a year and a half, you're going to ask for a W-2 and the recent pay stub, all right? So remember, as a wage earner, Just have all your W-2s. If your W-2 is not out yet and you're trying to get qualified, use your last pay stub from December the prior year. That should have a breakdown of your hourly, your salary, your overtime, your bonus, right? That will help you, right, qualify quicker without a VOE, even without that W-2, because the last pay stub breaks everything down, okay? So make sure you have your W-2s, your pay stubs. If you are going with a Cal HFA loan, certain down payment assistance loans, that's for 3 years of your tax returns and your W-2 when they're qualifying you. So make sure you have all that information. And last but not least, in this wage earning one, right, your VOE, the golden ticket to home ownership. I got to ask a question today. What's the difference between a big lender and a smaller lender, right? A VOE does cost a lender money, right? A lot of employers now, unless they're a small employer, you send it directly into them. Most of the bigger companies use a verification company to validate your income, right? It costs them like 40, 50, or 80 bucks or something like that, right? A lot of the bigger companies, they validate all that income right up front. So the income is concrete, right? These smaller companies, not saying all, but a lot of them, they don't want to pull a VOE until you're in escrow. The problem you're going to run into if you pull a VOE while you're in escrow and the underwriter declines your income or cuts your income, your approval doesn't mean anything, right? This weekend, I'm not going to say his name, but you know who you are, calls me frantic. Oh, man, my realtor had me go to another lender, and they said there's no way you can approve me conventional. This person had like a 740 FICO. They said I have to go FHA. I know why you're trying to make your borrower go FHA. If you have a 740 FICO, there are times you might have to go over FHA, but majority of the time you're not. They want the borrower to go FHA so they can make more money on the client, right? Why would you go FHA with a 740 FICO score? You have 5% to put down, right? But like, oh no, your DTI is too high. With some small company, right? The VOE is verification of employment, Raul, okay? Forgot to say that. The VOE is your verification of employment. But because I work for a bigger company, right when we took the client's application, we validated the income like that, right? In seconds. We spent our 80 bucks, bloop, 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 and we got the income. It's been validated. It's concrete. The borrower, all they need to do is make sure when they get paid every time, every week, every 2 weeks, that the income is not declining. Yes, they can validate everything, but if they see that your income is declining, guess what? They're going to cut your income, okay? So besides that, they qualified. But this VOE that we have broke down everything. The other lender didn't have the VOE. The other lender would have given them an FHA loan, right? When they qualified for a conventional loan. The payment is better on a conventional loan if the FICO is above 720, 740, okay? And right now, where rates are at and everything, conventional is the way to go if your credit is there. If your credit's not there and you can't get it there within 90 days, buy with what you have now, right? Don't try to fight it, because by the time your credit's fixed, homes might not be there anymore, or prices might go up, or rates might go up, right? So if you can't fix your credit in 90 days to get to where you want to be, buy with what the credit you have today, okay? So yeah, this VOE is a game changer. We had them approve conventional. The other person wanted to go FHA, right? And the make or breaker was this VOE. This VOE could either kill a deal or make a deal, right? So make sure when you're getting approved, make sure that lender orders that VOE ASAP. If they don't, you're out there. I see people happen all the time. You shop for a loan. You find a house. You call Becky. You call Uncle John, and you're like, oh my God, we got the home, right? And then everyone gets excited, and all of a sudden the lender, you sign your disclosures, you order your appraisal. They already ran your credit card for your appraisal. You're like sitting there going, chicka. I can't wait to give my 30-day notice. And then hit you with the smack, right? The VOE comes in. Income gets cut. Bye, Felicia, right? When you should have done that VOE, it's verification of employment up front. All lenders, Miguel, pull VOEs, right? It has to be third party. Back when I did the original VOE video, right? Back in the days, things have changed. You can walk your VOE into your lender, into your HR department if it's a small company, and that company can send it directly back to the lender, okay? The lender has to get it from the company for it to be validated, right? If you want to get one so you can review it, then have the lender get that VOE from your lender, have your HR fill it out and give it to you. But your HR company or your HR department asks them, how do you validate my income to buy a house? If they give you a salary key, then that you have to give the lender the salary key. But these bigger companies like where I work at, or these huge companies, they can pull the VOE themselves, right? They have the technology, and they have the resources to do it. A lot of these smaller companies, I'm not talking smack on them, right? You cannot control it. Even same thing with mortgage brokers, right? You're out there dealing with the mortgage broker, shopping for a home, right? And the VOE gets cut, or they don't pull that VOE up front, and you're having little hiccups to try to qualify after you're in escrow, right? So with the wage earner, the 30-day pay stub, especially in the job transitioning, is a very big deal, right? Also, that VOE is the make or breaker, right? If you use overtime or bonus to qualify you for home ownership, you definitely, right? You definitely want to make sure that VOE is in, right? It's the make or breaker. It will literally, it make or breaks deals. I see shattered dreams, broken hearts, devastating, right? Futures for people who don't get their VOEs pulled, right? Also, the VOE is good for 30 days. So after 30 days, that thing has to be pulled again. Especially during pandemic right now, they pull that thing like every week. They want to make sure you are not declining in income, all right? So that right there, guys, is our part one of everything you need to know to qualify for home ownership, right? Of course, we're going to do part two on Wednesday, so don't forget to check it out. So today, let's go over again. We talked about the 4 types of income that the lenders are going to use, right? They're going to use fixed income. Remember, there's 2 types. There's government ordered and court ordered, okay? Remember that, right? So that's fixed income. Rental income, second type of income, right? On rental income, there's existing rental, and then there's future rental, okay? Make sure you have the right documents if you're doing with future rental, all right? If the existing, pretty easy, off of your tax return. But remember, be careful. Don't write off too much if you're trying to qualify to buy or refinance. The third type, self-employed. Remember, right, if you're self-employed, they're going to want to see a full 2 years. Unless you're going to go 5% down conventional, they'll ask for 1-year tax returns, but they want you to be self-employed for at least 5 years or more, or the business has been around for at least 5 years or more, okay? So that's with self-employed income, all right? Make sure you know it's a sole proprietary. Pretty much you're going to file a Schedule C. If you're a C Corp, it's 1120. S Corp or LLC, you're going to get a 1120S in your K1s. Make sure you have your documents ready for your lender, all right? So they can validate it all so you can go out there and shop with certainty. And last but not least, our most popular income, W-2, wage earner income, all right? Make sure you have your W-2s. Your recent 30-day pay stub is huge right now because of pandemic. They check the heck out of that thing, okay? And last but not least, get that VOE in. If you're using overtime, you're using bonus, you just changed job 90 days ago, they're going to want to see that VOE. Especially a lot of you guys, if you took time off, right? You need that VOE so they can show the gap of all that time you took off, so they don't average out your income to see why. Well, if he makes X amount, looks like his income is declining. Why is it declining? Oh, he took 2 weeks off without pay. That completely makes sense, right? Lenders need to see that, and you want to show them that. And remember, that VOE is good for 30 days, all right, guys? That is part one of everything you need to know about income to qualify for home ownership, right? Next, on Wednesday, we're going to break down fixed income, rental income, right? Self-employed and wage earner. We're going to get into details of things you should know, right? About that income so you can go ahead and qualify for home ownership. We're also going to go over the income calculator, okay? So let's go some Q&A. If you have questions about income tonight, right, definitely bring it on. Teski Kata, right? How about income from overseas? If you file it on your tax returns, then you can use the income, right? As long as they can validate the income or the income with your employer and you file it and you have a 2-year history, you can use that income to qualify for home ownership, all right? That was a great question, and hopefully that is a great answer. Michi Robles, I have a stable job for the past 4 years and money in the bank. I also have a savings account. I have bad credit and a repo on my credit. How can I purchase a home? So it depends how old the repo is and how bad the credit is, right? If you haven't had anything bad with your credit in the past 12 months, no delinquencies, no charge-offs, if it's just old stuff and you've had your job for a while and you have money in the bank, you can probably qualify FHA. But the only way to tell is to run your credit and then run the numbers and then make sure it makes sense. All right, hopefully that helps you out. GB had a question. What's an average net for self-employed to buy a home? I write off everything. GB, there's no answer yet because we need more information. What you should do, GB, if you're self-employed and you want to buy a home, run your credit on Credit Karma. It's not going to affect your credit score. Get a list of all your monthly credit obligations, your revolving debt, your installment debt, your mortgage debt, any collections, right? Student loans. Add up all those monthly payments. Second, figure out the mortgage payment you're looking for. Take your mortgage payment, your monthly credit obligation payments, and add them together. Take that number, times it by 2. That is what you should net, right, to qualify to buy the home at that price. Hopefully that helps you out. Veronice Vallejo, what is the difference between FHA and conventional? The difference between FHA and conventional is the PMI and the down payment, okay? So let's go with down payment first. When you're going FHA, you're either going to go 3.5% down or 5% down, right? FHA is more flexible on the credit, right? But the PMI is constant, right? Which means there's upfront MI at 1.75 no matter where the credit is at or no matter how much you put down, okay? The monthly PMI is 0.85, all right? Conventional loan, they're going to require better credit, but the PMI, right, ranges depending on your credit and down payment. Typically, someone would go conventional if they're going with a 720 credit score or higher with a 5% down or better because the PMI on conventional will be cheaper than FHA. But if you're under 720 and you want to go conventional, typically the PMI will be higher than an FHA loan, okay? But remember, on a conventional, the PMI will fall off once you have a certain amount of equity in a certain amount of years. On an FHA, you would have to refinance out of it. Typically on an FHA too, rates are lower than on a conventional, but on a conventional, remember, there's more flexibility with PMI. On FHA, right, the PMI is higher and you have to refinance out of it. That's why they kind of give you a bonus kicker with a lower interest rate. Hopefully that helps you out. Roxy B, for a wage earner, I need the last 3 years W-2 or they're going to take the average income of all 3 years, or do they take the last year's income, which is much higher? So if you're a wage earner and you're doing down payment assistance, they want your last 3-year tax returns because they want to see, right, that you didn't write off any mortgage interest in the last 3 years if you're trying to qualify for a first-time home buyer program that's down payment assistance, right? When they look at your tax returns, right, they're going to give you your base income of what you have now, right? They're going to average out your overtime or bonus in the last 3 years. That's how they view your income. Hopefully that helps you out. Genevieve, is a VOE done for each employer over the past 2 years or only most recent employer? So if you're trying to qualify to buy a home, they're going to pull a VOE for all your employers in the past 2 years. So if you've worked at multiple jobs, they're going to pull it for each job you worked at to add up to a total of 2 years. Union workers, if you change jobs a lot, right, and you're trying to qualify to buy a home, have the lender start pulling all the VOEs right away. The only VOE they're going to have to keep updating, right, every 30 days is the recent one that you're at. But have your lender go in and call your employers and pull all your old VOEs, tally up to the 2 years, and your recent employer, right, if that VOE expires, they're going to pull one every 30 days. Hopefully that helps you out. Nam Gip, hi Minh, how soon can you refi from an FHA to a conventional? Does the property need to have 20% equity? And the answer is no, Nam. You can go from FHA to conventional whenever you have enough equity to go to conventional. Typically, you're going to need 3% equity after you cover all your closing costs, right? After everything is said and done, you need 3% full equity, right? Typically, you want to have 5% full equity so you can get the better deal. I wouldn't do it on 3%. I would do it on 5% or better, all right? If you bought a home a year or 2 years ago and you have an FHA loan, right, do not do a streamline. Go from FHA to conventional for sure, all right? If you have a home that's FHA and you don't have enough equity after 6 payments, right, it's It's better to go with an FHA loan to drop the payment so you can attack the payment and do one more refi, right? Because you can probably refi again one more time, right? Once you pay down more principal because your payment dropped, then go from FHA to conventional all day long. All right, hopefully that helps you out. Kai, hi Minh, can I put only 10% down payment for a second home or vacation home? The answer is yes. If you buy a second home, right? Not an investment, a second home, you could do 10% down. But remember, Kai, right? You cannot use rental income or Airbnb income to help you qualify. If it's a second home, you got to qualify to buy with your current mortgage payment and the second home mortgage payment. All right, hopefully that helps you out. Nessa Ness, do you recommend to pay off debt before thinking of buying a home? And is there a first-time home buyer program? Question number one, right? Should you pay off debt? Right now, where interest rates are at, right? Depending on where you're looking, but right now, for every $300 a month, $330 a month you eliminate, that's $50,000 more home. So you got to look at your debt, right? First, number one, get approved. And then if you're not happy with that approval, pay off the debt you need to pay off to increase your buying power, okay? So get qualified first. And then if you're not happy with that purchase price, pay down the debt you need to qualify for more home. And is there first-time home buyer programs? Yes. There's down payment assistance. Also, Fannie Mae and Freddie Mac has something called a Home Ready and Home Possible program, and the one program where it's a 3% down conventional. Hopefully that helps you out. Nam Gip, what's the difference between closing costs and cash to close? Closing costs is the cost to get the loan. That does not include your down payment. Cash to close includes your down payment and your closing costs added together. Hopefully that helps you out. Beljon Villanueva, can I purchase something over $3,000 while in escrow? If you buy cash, of course. If you're going to finance it, right, I would not do it because it can bring up your debt to income ratio. Let's say your credit is about to expire. Remember, your credit is good for 90 to 120 days. And you go out and you finance something for $3,000, right? That monthly payment is added to your debt to income ratio. And if you're barely qualifying, you can run into some problems and you might knock you out from qualifying. Hopefully that helps you out. All right, guys, that wraps it up for us tonight. I really appreciate everyone who reads through, right? Tonight was everything you need to know to qualify about your income to qualify to buy. Part one. This Wednesday will be part two. All the little tricks and things you need to know about income to qualify to buy, all right? Hopefully you enjoyed our content. I appreciate everyone who liked, who shared, who commented. Also, everyone who subscribed. If you did not subscribe, please hit the subscribe button and join the Wham fam, all right? Tuesdays, I answer questions throughout the day. So you have questions, I answer it. Hopefully a friend or someone might see that question. It might help them out. So definitely ask questions on Tuesday on Instagram. And Thursday at 6:30, we do a market update on Instagram. So don't forget to check it out, all right, guys? Enjoy the rest of the night. We want to end all our live stream with our attitude is gratitude. Without you, there would be no us. So thank you so much. Have a great night, guys. Again, thank you so much for watching our show. If you have any challenges or concerns regarding what's a mortgage, call me 714-332-2526.